Good morning. Welcome to a weekly update from TreasuryONE. I'm Cilliers of Market Risk, and joining me once again is Cilliers, currency strategist at TreasuryONE. So, Andre, we've seen in the last week and a bit that the dollar rand in emerging markets has really been under pressure. Dollar rand pushing up, trading close to key resistance levels of 1550 this morning. And it's all on the back of US 10-year treasuries that's really picked up pace, trading just north of 1.6% in the 10 years at the moment. What do you make of all this movements currently we've seen in the market?
Well, good morning, and thank you very much, Richard. Yes, everybody would have noticed that we didn't bring out a video last week because we didn't want to waste everybody's time speaking about a possible stimulus package and waiting to see what happens there. It's now happened. Over the weekend, it was approved by the Senate. It needs to be signed into a bill by the President before the end of the current package ends around the 14th of March, which I have no doubt that will be done. The implications of that is that we are being faced with a dollar that keeps on its little stronger rally, but now reached levels of technical significance. And we have to very carefully watch what is the implications of this package in terms of inflation. It's widely expected that the economy will bounce back and that will be resilient towards the downward move. And we've seen the non-farm payrolls figure coming out to a surprising figure, very much better than what was expected and anticipated. So it seems that the US economy is really on a bit of a bounce back. The implications on inflation. Now, we must here take back that stimulus has been going on really since 2008. Now, under normal circumstances, when you have stimulus and monetary expansion in the fashion that it's been going on for several years now, it can lead to hyperinflation. Now, I'm not going to go into that area now. I don't think that that's on the cards. The pandemic, it certainly made sure that people are having less money in their pockets to spend, and that helps with not getting into hyperinflation territory. But with all the stimulus packages that comes out and monetary expansion, we are being faced with the possibility of inflation. Now, we have seen the Fed saying very clearly that they will not move on interest rate unless they see inflation, and hence have not been concerned about the upward move of yields on the long end because they're more faced with what happens on the short end. So on Wednesday, when the inflation figures comes out of the US, it will give us a very good indication. But as I said, in the meantime, we're faced with technical levels that's being reached here. The rand standing very close to the 1550, 1555 areas currently. The euro is standing at 1878, which is around the 1875, also a significant level. And if it breaks those levels, if it breaks the 55 and it breaks the 1875 levels and starts approaching the 1850, now that's a key level. If it breaks that, then we could go well lower to the 17.5 area, which will have a significant impact on the dollar rand. So we have to be very cautious, and we'd like to update you on Wednesday. But in the meantime, as exporters, I think we can hold off slightly. Have your orders in at around the 1560, 1565 levels. On the euro rand, have your orders in around the 1850 levels and take advantage of forward points. Don't overreact by doing too much too quickly, but we will update you on Wednesday after the inflation figures.
Thanks so much, Andre. Obviously, when you talked about 1875 and 17.5, you were talking euro dollar, so it's 118.75 and 117.5, just for clarity for the viewers out there.
Yes, indeed.
Yeah. Yeah, so obviously, yeah, we'll watch inflation later this week to see what happens there. For now, just everybody just watch what happens in the markets. Be careful out there. There's definitely some risk of moves still here, but do take advantage, like Andre said, of some forward points and at least do something. Don't do nothing here at these levels. Until we chat again. Thanks, guys. Bye.